Namaste and good morning. Welcome to the solaaane.com Daily Brief, your daily dose of business news that matters. I'm your host Karan Mehta, and today is Thursday, April 16th, 2026. The market took a breather after yesterday's rally. Wipro pulled out the checkbook, and India's energy math just got harder. Let's dive in. First, today's top headlines. Sensex slipped 124 points to close at 77,989 and Nifty settled at 24,086. Profit booking in banking and telecom undid most of yesterday's bounce, even as crude eased and US-Iran peace chatter held the floor. Wipro announced its Q4 results after market hours and confirmed a 15,000 crore rupee share buyback at 250 rupees a share. Its first in 3 years, but well below the 16,000 to 18,500 crore range the street had been priced for. The rupee touched a 3-week low near 93 rupees 40 paise to the dollar, dragged by rising oil and weak risk sentiment. SBI's research team says the currency could bounce back, but only in the second half of FY27, meaning October onwards. And the center announced the MSME and Startup Innovation Summit and Awards on April 23rd at ITC Maurya in Delhi. Over 300 founders, CXOs, and policymakers, with deal opportunities pegged at over 500 crore rupees. Deep Dive 1, Wipro buyback and the IT shakeout. Let's take a deeper look at Wipro. The 15,000 crore buyback at 250 rupees is significant. Wipro is sitting on 41,500 crore of cash, the highest among India's top 5 IT firms, and shareholders were expecting management to be more aggressive. The smaller-than-expected offer signals that Wipro wants to keep dry powder for AI investments and inorganic deals. They just announced a $70 million acquisition of AlphaNet consulting contracts on Monday. Why it matters for MSMEs. Indian IT services is being rewired by AI. TCS has cut 12,000 jobs in FY26, and Wipro has slashed its fresher hiring guidance to between 7,500 and 8,000, down from 10,000 earlier. If you run a small business that supplies to IT parks, cafeterias, transport fleets, housekeeping or training services, your client base is shrinking quietly. Renegotiate your contracts assuming flat to down headcount through 2027 and start diversifying into financial services, global capability centers, and pharma R&D parks where hiring is still strong. Deep Dive 2, the energy squeeze just got real. Moving on to the bigger macro story. Two things converge this week. The Strait of Hormuz, where 20% of the world's oil and 25% of LNG flows, is under fresh blockade pressure from the US-Iran standoff. And on April 11th, the US waiver allowing countries to buy Russian crude expired. India had been pivoting back to Russian barrels after Middle East supply got disrupted. That escape hatch just closed. What this means in numbers: every $10 rise in crude adds about $13 to $14 billion to India's annual oil bill and widens the current account deficit by 0.3% of GDP. RBI has already revised FY27 inflation up to 4.6%, almost double last year's 2.1%, and held the repo rate at 5.25 last week mainly because of this. For business owners, the practical impact: diesel-linked logistics costs are not coming down soon. If you're in food processing, textiles, building materials, or any export sector with thin margins, build a 5 to 8% input cost cushion into your Q1 quotes. Lock in fuel surcharges with your transport partners now. And if you import dollar-denominated raw material, hedge at least 50% of your next quarter exposure. At 93.40, the rupee has more room to weaken before any RBI defense kicks in seriously. So pulling it all together, 3 takeaways. 1. This is a profit-booking market, not a trending market. Don't extrapolate yesterday's rally. Keep your treasury defensive. 2. Capex is happening, but in pockets. JSW Steel placed a 300 crore order with John Cockerill India today for a galvanizing line at Khopoli. Auto OEMs and large EPC players are still spending. India crossed 2 lakh EVs in FY26, with Mahindra growing more than 5-fold. If you supply components, fabrication, or services to the auto and steel value chains, push your sales pipeline now. 3. Bengaluru and Chennai are bucking the national housing slowdown. Brigade Enterprises just signed an 8.63-acre township deal in Ganjur today. If you're a small contractor, interior designer, or modular furniture maker, the South is where the demand still is. That's your solaaane.com daily brief for April 16. If you're thinking about buying or selling a business, head over to solaaane.com. That's 16ane.com, where we make business deals sola ane paka. See you tomorrow.